everyone, my name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello Peter.
Hi.
Thank you for joining us today as we're looking at the fundamentals and driving the markets currently. So Peter, how have the markets been reacting yesterday?
Well, we had the US dollar which corrected lower after the initial market reaction due to the rather hot inflation report for August from the US. So we have a relative stabilization of the USD, which may more or less imply that the markets have turned their eyes now to the Fed's interest rate decision next week on Wednesday in order to actually see how the whole event will be playing out and what the Fed's intentions actually are. Mind you that next week in the Fed's interest rate meeting, we are going to have also a new dot plot. So practically that would imply that policymakers will be providing their view on where rates should be in the next 2 years.
And what about the Aussie?
Well, the Aussie had some mixed reactions today during the Asian session. We had the release of the employment data from Australia. The employment change figure jumped back into the positives once again. That was a good positive note for the Aussie. On the flip side, we had the unemployment rate, which ticked up from 3.4 to 3.5, if I'm correct, more or less implying that there may be a crack in the tightness of the Australian employment market. Initially, at the time of the release, the Aussie dropped around 19-20 pips against the US dollar, yet recovered the lost ground quite quickly. More or less, we still view 3.5% unemployment rate as being quite low. So overall, that would imply that RBA is to be allowed to continue to hike rates, and that could be providing some support for the Aussie. On the other hand, let's not forget that the Aussie always has an eye turned also towards China, as it's one of its, if not the main, trading partner of Australia. So more or less, we may also be keeping an eye out for Chinese developments as well.
And how did the Kiwi react to the release of New Zealand's GDP rates for Q2?
The Kiwi got a boost as practically the GDP rate for Q2 accelerated beyond more market expectations. It reached 1.7%, and that was more or less a positive surprise for Kiwi traders, which overall once again allows RBNZ to continue on its rate hiking path. Yeah, more or less that should be it.
Staying in the Pacific, did we have news that BOJ could intervene in the markets?
Actually, there were some news. There were reports that BOJ was snooping around banks for exchange rates of JPY. And that was interpreted as a preparation of the bank for a possible market intervention to support JPY, which has reached very low levels against the US dollar. I would note though that BOJ's intervention, should it occur, could be short-lived. A possible market intervention would be once off, possibly. A. B. We may see the market's reaction initially being shocked, which could support the JPY, but in the following days of such an intervention, we would expect the market to once again recreate the bearish tendencies for JPY, as the fundamental reason behind the weakening of JPY is practically BOJ's dovish stance. Mind you that next Thursday we are going to be getting BOJ's interest rate decision, so we may see further clues on the issue from there.
And now let's have a look at the Europe. What's new for the common currency?
Well, the euro slipped yesterday against the US dollar. There was an issue which more or less we may see that the outlook for the Eurozone is still on the negative. especially given the problems we have with the fuel shortage. I would note though that we had ECB policymaker De Galau, which stated that the ECB may be coming back to neutrality level with its interest rates by the end of the year. That would imply practically that the ECB would be raising the interest rates by the end of the year to 2%. That was positive news, yet for the time being, I think they were overshadowed by the negative outlook for Eurozone's economy in the coming months.
And what is on the calendar for the day?
Well, we are to have Eurozone's trade data. I would be noting from the US side practically 3 releases. The first would be definitely the weekly initial jobless claims figure. It's expected to rise a bit. Mind you that in the past 3 weeks the reading has corrected lower. Should the reading rise, that would imply that more people have applied for jobless claims, and that would be a negative for the USD. I would be highlighting definitely the retail sales growth rate of the US. It's expected to remain at stagnation levels at 0 on a month-to-month basis, and that could weaken the US dollar substantially. And the issue here is that practically should retail sales not get a lift, that would imply some hesitation on behalf of consumers or some inability to actually spend more in the US economy, especially given the inflation rates, which are pretty high right now. Other than that, I would be highlighting tomorrow during the Asian session the release of the Chinese data. We get the industrial output growth rate. And I would be also highlighting the retail sales of China, as China has started to rely also on the domestic market as well. So practically the strength and the health of the internal demand side for the Chinese economy could have a substantial effect on the Aussie as well.
Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter.
So welcome to the technical analysis part of the presentation for today. In front of your charts, in your screens, we have the US dollar index for our chart. Mind you that all charts which are to be presented today are to be of the same time frame, unless otherwise stated, of course. Now, the US dollar index seems to have maintained a sideways motion. It was interesting that during the early European session today, it had taken an attempt once again on the 109.90, but failed to break it. So the level holds and seems to have solidified its importance to traders. For the time being, we tend to maintain our bias for a sideways motion, probably between the 109.90 and the and the 109. Let me correct this. There we go. And the 109 in this area. On the other hand, we would note that the RSI indicator is slightly above the reading of 50. It's actually at 55, which more or less tends to imply, in my opinion, a sideways motion. I would like to see it above 60 and start to actively aim for the reading of 70 before implying that it may be pointing towards a bullish sentiment on behalf of the market. Yet what we could add here would be definitely the Bollinger Bands. Trend, Bollinger Bands, 20 periods, 2 deviations. Okay, so we have as a midpoint the 20 moving average and plus 2 deviations. Okay, let's color this in red. Sorry, in blue. Dark blue should be perfect. Yeah. Could we also thicken it up a little bit? There you go. That's better. So we see the case for the sideways movement to continue for the time being. On the other hand, the Bollinger Bands seem to allow some room for the bulls to advance. Should the bulls take over, I wouldn't be surprised, or I would require, if you prefer, a clear breaking of the 109.90 resistance line. And the main reason why is that practically such a breaking would allow for a higher peak to be formed. So practically for the bulls to take over, I would expect the price action to rise, break the 109.90, and start actively aiming for 110.75. Now, in case of a bearish scenario, we may see the price action reversing direction. And in this case, the first signal of a trend reversal, practically the end of the sideways movement, would be a breaking of the 109 support line. Note how the level has provided support here, resistance here, and resistance here. So that seems to be quite valid. At the same time, some of our colleagues at the research team have argued that there is a mid-level somewhere here, which is not so improbable. It could be a case. That would be around 109.35. But for the time being, I'm maintaining the S1. That's it. Once again, sideways motion expected. For a bullish scenario, we require clear breaking of the 109.90 and the price action to start aiming for 110.75. For a bearish scenario, we would expect the price action to drop, break the 109 support line, and start actively aiming for 107.85. Let's have a look now at EURUSD. EURUSD, which has remained also in a sideways motion, just below parallel level. We tend to maintain the bias for sideways motion. Mind you that despite the Galau's comments yesterday, the US dollar remained in the driver's seat, and it's characteristic that the market is focusing practically on the USD. And that's the main market mover. Once again, let me add the Bollinger Bands as we here as well. Okay. So we may be seeing some slight bearish tendencies given that the price action is below the mid-level of 20 of the 20 moving average of the Bollinger Bands at the same time, yet though remains pretty close to the reading of the 50 at the RSI indicator below. Actually, it's at 46. So that's pretty much implies that the market has not still decided on the direction of the pair. In my opinion, the sideways motion seems set to continue for the time being. Yet in the American session today, we may see the retail sales growth rate affecting the direction of the USD. And at the same time, I would also note the release of the weekly initial jobless claims figure. Also note the Philly Fed Business Index, which is expected to drop, and if actually so, could imply a slowdown of economic activity, of expansion of economic activity in the wider Philly area. And I would also be noting the industrial production growth rate of the US. So practically you have 4 releases which are more or less able to alter the US dollar's direction. That's the one side to see it. The second would be that the US dollar is going to be moved practically by the Fed's next interest rate decision Wednesday next week. So practically traders are expected to keep an eye focused on the Fed and may not be excited by other events for now. We're going to have to wait and see. For the time being, once again, the sideways bias is expected to be maintained, and for it to change, we would require clear breaking of the target level to the upside for a bullish scenario, the price action to start aiming, if not even testing, the 1.0095 resistance level. For a bearish scenario, I would require clear breaking of the 0.99 support line, which provided support here, here, and here. Okay, let's have a look now at GBP/USD cable. Cable, which, mind you, by the way, BOE was about to release an interest rate decision today. That was not the case due to the passing of Queen Elizabeth and the Thursday morning period. We expect the interest rate decision to be released on next Thursday. That would be the 22nd of the month. For the time being, once again, the pair seems to remain in a sideways motion. A stabilization seems to have occurred. And I would have to say that besides the fact that the USD is in the driver's seat for most major currency pairs, also I would be noting that practically the market seems to have gotten a shock, definitely, on Tuesday. But yesterday, on Wednesday, the market may have been able to absorb in a substantial degree the possibility that the Fed's going to remain quite hawkish, at least in its next meeting on Tuesday. But mind you that in its next meeting, besides the interest rate decision as such, we are also about to get the new dot plot of the Fed, which would be of specific interest to know where Fed policymakers are actually visualizing rate hikes, or if you prefer, the rates as such, going over the next 2 years, and how inflation is expected to be moved, etc., etc. Cable. For the time being, once again, we maintain a bias for sideways motion between the 1.1605 resistance line and the 1.1450 support line in this area here. For a bullish scenario, would require the price action of cable to rise, break definitely the 1.1605, and aim, if not even breach, the 1.1740 resistance level. On the flip side, should the bears take over, we may see the price action of cable dropping, and the first signal in our opinion that would be sent out for a possible trend reversal would be the breaking of the 1.1450, implying that the bears are coming, and start aiming for the 1.13 support level. Let's have a look at USD JPY, which is of special interest. Now, USD JPY, as we have mentioned, is already in a sideways motion. We have mentioned that yesterday, and we had mentioned that the 143.50 seems to be acting as a mid-level. Actually, it could be a little bit lower. It could be where the price action is right now. For the time being, we tend to maintain our bias for a sideways motion. We would expect the price action to remain between the 145.20 and the 141.50. On the other hand, we cannot help but noticing that the 143.50 resistance line seems to be playing an active part in the price action of USD JPY. Note how it provided resistance here and here. That was during today's late Asian and early European session. So it seems to remain pretty valid, and the price action was not able to clearly break it today. So I'm keeping it. But for a bullish scenario, I would require a clear breaking of the 143.50 definitely, and also a clear breaking of the 145.20, with USD JPY possibly starting to aim, if not even reach, the 147.50. On the other hand, should the bears take over, I would expect the price action to drop, break the 141.50, and start actively aiming for the 139.05. For the time being, small recap, we maintain our bias for the sideways movement. I highlight that the RSI indicator seems to continue to run along the reading of 50, implying rather indecisive market. Let's also have a look at what the Bollinger Bands are saying. Trend, Bollinger Bands. Once again, 20 moving average as midpoint plus 2 deviations, dark blue. Okay, practically the price action since the Asian session, since the American session, the late American session yesterday, has been engulfing the 20 moving average. And I would like to say that practically the Bollinger Bands, the upper and the lower band, seem to have narrowed somewhat, implying also some stabilization. Interestingly enough. Yeah. So practically the sideways bias for the time being seems to be holding its ground and is valid. Okay, let's have a look now at USD/CHF. USD/CHF, which despite also being a substantial safe haven currency pair, seems to have a very, very different course in comparison to USD/JPY. It's characteristic that USD/JPY remains very stable, low volatility. See what USD/CHF is doing right now. Note the drop, implying a strengthening of the CHF. Why? Because practically the US dollar remains relatively unchanged. So the driving force behind USD/CHF in this case should be CHF as such. It would be interesting to compare also the euro against the CHF. Let's find it. Opening the market page. Show all. Let's widen this a little bit. GBP, Euro. And the CHF, Euro. Going to the upside, Euro USD, Euro CHF. Here it is. New chart window. Let's upload template we have already fixed for our chart. Zooming in, you can see that in the past 4 hours, Euro has also been weakening against the CHF. So that's a further indication of CHF strengthening. Let's also have a look at the pound against CHF. There you go. It's very, very interesting to see that you can see the same movement also against the pound. So the Swiss is on the rise. That's the main issue here, the main story. And it's on the rise against the GBP, against the Euro, and against the US dollar. Let's also have a look at the Bollinger Bands to see whether the Bollinger Bands have been tampered with. And that will be charts insert indicators, trend, Bollinger Bands. 20 moving average, 2 standard deviations, dark blue. Okay, that's interesting. It's interesting because the price action has broken the 20 moving average. Also note how the 50 the 100 and the 200 moving average are converging. It's a very, very interesting chart. Okay, let's also add some labels here. Here they are. Let's quote them. And we're ready. So for the time being, we tend to maintain. Now, that seems to be a bias for a sideways movement, but in our opinion, I would be highlighting the bearish tendencies of the pair. Why? Because A, we have a wide drop over the past 4 hours, which is evident also in Euro CHF and GBP CHF as we have seen before. At the same time, though, I would be noting that the RSI indicator below the 4-hour chart has also a steep drop. It's actually now at 40, which is also heading lower. So there may be some bearish tendencies on behalf of the market for the pair. In such a case, should the selling interest be extended, I wouldn't be surprised to see the price action dropping, breaking the 0.9480, and I'm mentioning the 0.9480 because the 0.9480 provided support once here, twice, 3 times. So practically for the bears, it's a significant level to keep an eye out. Should that be broken, the way is paved for 0.9375, which is also the lowest level in our chart. Okay, let's have a look now also at AUD/USD. Moving in a tight range-bound movement between the 0.6770 and the 0.67. We tend to maintain our bias for sideways movement of the pair. Albeit, we have to note here that we may be having practically the 0.67 as a support line, which provided support once here, twice here. So it's pretty valid. And we may see the price action in bearish scenario dropping, breaking the 0.67 and start aiming for the 0.6645. I'm mentioning the bearish scenario. Why? Because the RSI indicator below the 4-hour chart seems to have a downward slope. Despite being at 41, we may see it aiming for the reading of 30, which could intensify such bearish movement. For the time being, though, I highlight the sideways movement between the 0.6770 and the 0.67. Let's have a look at the Bollinger Bands as well, but I do not expect much here. Probably will be in the mid-level, but let's just have a look. There it is. Yep. It's interesting how the price action remains rather stable, but remains in the lower half of the Bollinger Bands. And also note how the Bollinger Bands, the 20 moving average, the lower boundary and the higher boundary are all inclined downwards. And that could imply practically some bearish tendencies as well. On the flip side, should the bulls take over, I wouldn't be surprised to see the price action breaking the 0.6770 and start actively aiming for 0.6835. So let's make a recap about AUD/USD. We have definitely a bias for sideways movement between the 0.6770, which was tested here and here, and to the downside here and here. And The lower boundary of the current sideways movement could be the 0.67, which was aimed for here and tested here. So in this spectrum, I wouldn't be surprised to see AUD USD being moving. On the other hand, though, there may be some bearish tendencies in the market, a selling interest which could be extended, in which case I wouldn't be surprised to see the price action breaking the 0.67 and start aiming for 0.6645. Okay, let's have a look now at USD CAD. By the way, it would be interesting also to see what the market reaction was on the release of the Australian employment data earlier this morning. Let's have a look. This is the minute chart. Zooming in. And it was at around, there it was. Note how the price action from around 20 minutes before the release was on the rise. Note the drop of AUD USD of around 19 pips. And that was a result mostly of a slight disappointment on behalf of the traders, of Aussie traders, due to the tick up of the unemployment rate. Nevertheless, the market found its footing and practically rose and continued higher. So practically there was an instant market reaction which had no further consequences for the pair. That was later on. Okay, drilling back down to back out to the forward chart, readjusting. Okay, sideways movement continued. Let's move now to USD CAD. USD CAD, let's zoom in a little bit. Very tiny range bound movement here by the pair, just below the 1.3205. For the time being, though, I would like once again to see the Bollinger Bands, indicators, trend, Bollinger Bands. Okay. So the pair, it's interestingly enough, has stabilized somewhat after hitting the upper Bollinger Band right here. It was an intense rise. That was Tuesday. Yep. On Tuesday, with practically the release of the USCPI rates, that was here, and the stabilization. It's a very tight range bound movement just below the 1.3205. I wouldn't be surprised to see some volatility here, but still for the pair to remain between the 1.3205 and the 1.3075. On the other hand, we note that the RSI indicator below the forward chart is currently at the reading of 60, which is not negligible. Has lowered a little bit, but it's still pretty high. So there may be some bullish tendencies here for the pair, which should not be neglected. Should the bulls take over, I wouldn't be surprised to see the price action rising, breaking above the 1.3205 resistance line and aim for the 1.3350. Yet, mind you that the upper Bollinger Band may slow down the rise should the bulls take over. On the other hand, should the bears be in charge, we may see the price action dropping, breaking the 1.3075 and start actively aiming for the 1.2945. For the time being, though, we tend to maintain a bias for a sideways motion between the 1.3205 and the 1.3075, especially given the past tight range bound movement. So we may see the price action remaining just below the 1.3205. Let's have a look at the Kiwi, which had the release of the GDP rate for Q2. Not much. Also in a tight range bound movement. Let's drill down to the minute chart and have a look at how the pair reacted. It is proud. See how the pair practically rises in a matter of minutes of around 17 pips. That was the reaction of NZD-USD to the release of New Zealand's GDP rate for Q2. Mind you that the rate surpassed market expectations. It was expected to land at around 1%. It actually reached 1.7, which was pretty positive for the Kiwi and could be allowing practically the RBNZ to maintain a rather hawkish stance, providing a boost in the confidence of the bank. Let's drill out to the 4-hour chart once again, readjusting the levels. Sideways motion continued as the price action is practically revolving around the 0.60 level in a tight range-bound movement. I wouldn't be surprised to see the pair being continue to be driven by that level. On the other hand, the RSI indicator we have noted is pretty low. It's actually right now at 38. So you may see some bearish tendencies or selling interest surfacing, in which case we may see the price action dropping, clearly breaking the 0.60 support line, and aim, if not break, the 0.5910. On the flip side, should the bulls take over and should we see a buying interest being expressed by the market, we may see the price action rising and testing, if not even breaking, the 0.695, nothing less. Let's also have a look at the Bollinger Bands once again. Let's add them in. Indicators, trend, Bollinger Bands, albeit they shouldn't show us much, it should be at the mid-level. 20 moving average as the guide and 2 standard deviations. Actually, it's not. The pair remains in the lower spectrum, the lower half of the Bollinger Bands. Also note once again how the Bollinger Bands have taken a downward motion, downward slope, implying more or less that the price action may have some room to the downside and the Bollinger Bands would be allowing it to head south. So that should be it for us. From all of us here at IronFX, best wishes for solid trading.
Today we're going to learn about the role of central banks and the main functions that they perform. After the Bank of England's establishment in 1694, the UK government used to take out a loan and it acted as the government's banker and trustee, in particular when it involved raising money. As trustees, central banks often bought government bonds. The action is known as monetary financing, which is still used today. The most important responsibility of the central bank is the monopoly it has over the distribution of money. Having a monopoly over the supply of money means that a central bank cannot run out of money. Theoretically, a central bank can issue any amount of money it needs to meet its needs. Of course, an uncontrollable increase in the amount of money would lead to higher inflation, raising the cost of living and limiting any benefits of the economy. Because the central bank is able to issue an unlimited supply, it cannot really run out of liquidity. Another important role of a central bank is to act as the lender of last resort during periods of distress. Central banks should lend to banks which are solvent in order to avoid panic. This is unimportant as in general the main activities of commercial banks are to provide loans and obtain deposits from the public. As the money is lent out, banks only have a limited availability of cash to cover for deposit withdrawals. During the times of the Great Depression, when many withdrawal requests were made at the same time, the commercial bank did not always have the available funds to meet all withdrawals. Therefore, to avoid panicking depositors that they will not be able to get their money back, it borrowed from the central bank. That's why the central bank is known as the Bank of Banks. Stay tuned with us for a live webinar about trading strategy clinic with Desmond, and don't forget to visit the webinars page at IronFX website to subscribe to more webinars.
We're going through the webinar today. Oops, let me see, where is my face? Okay. Super. Hey, Noel, how are you doing? How's Philippines? I'll give it a couple of minutes, a minute or two, and then we shall get started. Great to see everyone here. So we are going through the webinar series, the live trading session today with IronFX. So do let me know as we get through the sessions at any point in time. If you have any questions, if you have any trading questions, you would like to find out more about anything in particular, do let me know. Do put it into the chat and let me know. So while we wait that one more minute, what I'd like to do is, as Noel has already done, let me know where you're joining me from. So we've got Noel from Philippines. If you can all put it in, where are you joining me from? I'll be super keen to find out. Where are we reaching out to? Finland. Hey, Juha. Fantastic. Just keep it coming. All right. We've got everyone. We've got a lot of people in all different time zones. So thank you. Good. Thank you for taking the time out today. In all different times of the day to join us during this live trading session. I hope you have questions. I'll be looking forward to that, and I do hope you have. You look forward to some possible trade ideas, possible trade setups that we might come across today. All right. So, as I said already, webinar series today, live trading session with IronFX. Just a quick risk warning and disclaimer there. Any information shared in this webinar should not be considered as investment advice or an investment recommendation, but instead as educational material only. All right. So this material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein. What it means is that I will be sharing with you my thoughts, my ideas, what I see in the market, what I think is likely or could happen in the markets if you are going to be jumping into any trades, please make sure you do your due diligence. Make sure you check your analysis, check your charts, check your lot sizes and leverage. Make sure you're not over trading or over leveraged, because through my experience coaching a lot of traders, the thing that hurts a trading account the most is not so much a bad trading strategy, but more about a poorly risk managed account where a trader over trades or over leverages. All right. So with that, let's kick on. Just a quick introduction. My name is Jin Dao. Everyone calls me Jin. That's Jin. Right. I'm one of the prop trader and market analyst here at the Everest Fortune Group, and I'll be happy to do this session going through with you some thoughts. We do have a big news to be released tonight from the US, so I'll be sharing with you my thoughts, my ideas about possible trade setups. I have been trading for more than 10 years now. So back in 2008, I started. So a lot more than 10 years now. If you have any questions, I'll be happy to, hope to give you some tips, some ideas, some advice, possibly. And I look forward to the information helping you with your trading journey, hopefully to make it a lot more profitable, a lot more longer term. All right. So let's get started. Take that away. And here we go. All right. How I approach the markets is a little bit different compared to what I've seen around. Okay. A lot of times I've seen a lot of traders, first thing they do when they look at the markets, they jump onto the charts, they load up MT4, they jump onto the charts, they look at the price action, they look at the candlesticks, they look at patterns or indicators and levels, right? I do it a little bit differently. The first thing I do every day, well, almost every day apart from weekends, first thing I do, I jump onto Forex Factory, I check out the news. I check out the news to give me an idea of what has happened, right? What has happened, what is going to happen, and what could happen as well, right? So with that, for example, today we saw early morning, and this is GMT +8. Early morning, we saw the New Zealand dollar GDP quarter on quarter was a minus 0.2%, expected to be a 1%, came out at a 1.7%. All right. So with that, if I was up at that time, I would have anticipated to see possible dollar or Kiwi dollar strength or brief Kiwi dollar strength because of a good GDP number. Very good GDP number quarter on quarter could push the New Zealand dollar towards the upside. As we know, and I'll show you slightly later, the Kiwi dollar actually moved a little bit, but then set in consolidation as well. And there's a reason for that. I'll share with you shortly. Later into the morning, we saw the Aussie employment numbers. Employment change was a minus 40.9K, expected a 35.5, came out at a 33.5. It is slightly less than expected, right? Slightly less than expected, but in material terms, not significant. What's more interesting is the unemployment rate, right? It was 3.4%, expected to stay at a 3.4%, but actually climbed slightly to a 3.5%. So unemployment rate in Australia currently at 3.5%, increasing slightly. What we actually saw in this case, or what we would have expected to see in this case for the Aussie dollar, was some weakness in the Aussie dollar. We saw that. And then after that, we saw a bit of a bounce, and now I'm looking for that continuation towards the downside. But all that's done, all that news is done. The main thing, the big feature news coming up in a couple of hours, right? It's 6 o'clock here, GMT +8 at 8:30. So in 2.5 hours time, we do have the US retail sales number, right? US retail sales number month on month was 0%, expected to be a minus 0.1%. Okay. And core retail sales number month on month was a 0.4%, expected to be a 0%. So it looks like, based on these forecasts or expectations, was 0.4 expected to be 0. So they're looking like a low number, a minus 0%, or possibly even a minus number there. Retail sales number was 0, expected to be minus 0.1. Looks like a bad number there. Just based on that, as a first level or first approach, what I'm looking at is that could a weaker retail sales number and core retail sales number be released? Right? If it comes out at 0 or minus 0.1 for core retail sales, if it comes out at minus 0.1 or minus 0.2 even, a weaker retail sales, a weaker core retail sales number would show that people are not spending in the US, right? Consumers are not spending in the US. And if they're not spending, companies produce less, overall economic activity drops. Why they're not spending is possibly because inflation in the US is at a record high and still climbing based on the recent data. So recent data on Tuesday, US CPI continues to climb. US inflation data was a 0.0%, expected to drop slightly, but it did climb 0.1. Core CPI climbed quite significantly, expected to be a 0.3, came out at a 0.6. Right? So we saw that inflation continues climbing, makes things more expensive, possibly leading to that weaker or potentially weaker core retail sales and retail sales data to be released in 2.5 hours time. Right? So with that, I'm thinking one scenario, what if we see a weaker US dollar? What if we see a weaker US dollar? Where could prices head towards? I'll plan for that scenario. And then in the alternative scenario, I'll also be planning to say, what if at a 0%, what if it comes out as 0.1 or 0.2? It's an easy number to beat, right? So we could actually see this, if it comes out at 0.1, it'll be green, it will signal a positive number. Retail sales number, if it comes out at 0 or 0.1, it will be a positive number again. Then we could see that dollar strength come back into play, right? So I'll be looking at this, or I'm looking at this now. I'm planning for two alternatives, right? I'll be planning for two alternatives in the scenario where we see dollar weakness, which pairs I would be looking at. In the scenario where we see dollar strength, which pairs I'll be looking at. Okay, so that's for today. For tomorrow, on Friday, you can see not a lot of news to be had. We do have the US consumer sentiment, but it looks like it's going to increase, but we leave that for tomorrow. Most of the trades most of the volatility will probably happen tonight, leading into tomorrow afternoon. Okay. Any questions so far? Everyone's here. Any questions so far? If you do, let me know. Okay. While I'm looking at the news, I want to show you a couple of big important news that's going to be happening soon next week. All right, happening into next week as well. What we do have into next week, I want you to pay attention to this, will be on Thursday morning GMT +8 at 2 a.m. Okay, we do have the US Fed funds rate. Interest rates possibly or most likely going up 75 basis points for the US from a 2.5% to a 3.25%. Okay, what I'll do here is that, as you guys, I think most of you, quite a number of you are in the UK. So let me just put this towards the UK timing, so you can all look at that. So it's GMT there. So this is London timing into next week, just to let you know, on Wednesday at 7 p.m., right, London time, interest rates from the US looking to go from a 2.5 to a 3.25%. This could be a high impact news, or this is a high impact news, but, right, this is a high impact news, but that 75 basis points could be highly priced in already. It has been signaled from a very long time ago from the Federal Reserve that they will be increasing rates by 75 basis points. The CPI data has continued to grow, and that's providing that additional reinforcements or reconfirmation that they do need further interest rates increases. So as much as this is a 75 basis points increase, could be a bit priced in already. So just be extra careful with that, all right? And following on from that, on Thursday, London time now, we do have interest rate decisions to come from the Swiss National Bank. We do have the Bank of Japan with their monetary policy statement and press conference to be released. And for the UK, we do have interest rates decision as well. All right. In this case, current interest rates at 1.75%. They are looking at possibly another 75 basis points increase to come from the Bank of England. All right. So what would you notice here is that on Wednesday to Thursday, we're going to see a lot of central bank news to be released. Firstly, from the US FOMC, 75 basis points increase, followed on with the Bank of Japan with their press conference and monetary policy statement. Following that, the Swiss National Bank, possibly they could surprise with an interest rate decision hike as well. And then we do have the Bank of England with their interest rates decision, possibly that 75 basis points increase again. Following on from that, we do have some PMI numbers for the Eurozone and the UK on Friday. So that's the outlook for the week. A lot of news to be released into late next week. What that could mean is that we're going to see a lot of volatility into late next week. Leading up to that, we might actually see markets trend a little bit before consolidating into the lead up of these events. All right. So with that, still no questions from anyone yet, or happy or good? Let's look at the charts. Okay, so let me take that away first. All right, so this is the Aussie dollar on an H4 time frame here. Right, I'll show you first on the H1 this morning. This morning's news. Let me move this back. This morning's news at 9:30 a.m. Right, this morning's news at 9:30. We saw here that push up, and then when the news got released, we saw that push back down again. So from 10 o'clock, that candle push back down, right? So one key point I'll focus on here is that reaction at that, firstly, where was it? This point there, okay? 0.6770. We saw it reacting at this level, bounced a little bit there, and then on the hourly candle, it shot up, hit that level, and rejected to push towards the downside. Bad news, bad employment numbers from the Aussie, pushing the Aussie dollar towards the downside. From 10, 11, 12, 1, there was about a 25 pip move, not a big move towards the downside, okay? But what you can see is that prices continue sitting pretty much in a bit of a consolidation before this session, testing a little bit lower, but then right now sitting still at that 674, just above 6740. What I'll be looking for on the Aussie dollar here is if price can break below that 6730, right? But the maximum or the lowest point it will go to, based on the current levels, will be at about 6700, right? 6700 towards the downside. What this means is that if we do see that dollar strength, come into play, price likely to come down towards that 0.67 level, dollar strength pushing the Aussie dollar down, but it's not likely to be an attractive trade. If you did sell it down, you could have a 20 pip take profit, a tight 15 pip stop loss, slightly over 1:1.5, or about a 1:1.5 risk reward ratio towards the downside. Not a great trade I'll be looking for on the Aussie dollar towards the downside, right? If we see that dollar strength. Alternatively, what I would say is that you would look at the Aussie dollar if we do see the US weaken, right? So retail sales number comes out, it's a minus number for core retail sales, it's a minus number for retail sales number. Then what I'll be looking for is if price can push up above that 0.677, right? So it could come down now, and if it pushes up above that 6770 level. If it does that, then I'll be looking for a buying opportunity. So on the Aussie dollar, on the flip side, I would actually be more tempted to look to buy above 6780 towards that near-term support turned resistance level. About a 45 pip take profit. Can keep my stop loss quite tight, about 20 pips. A 1:2 risk reward ratio towards the upside there on the Aussie dollar on the H1 time frame. Wait for the news to be released first. See the data. See the price move towards the upside. There is a lot of space for it to move up, break above that resistance. Then I'll be looking to buy it up. Okay, so that's my view on the Aussie dollar based on the news if we do see a weaker US dollar. With that, looking at the Kiwi dollar, take all of that away now. Looking at the Kiwi dollar, one thing I'll do is I'll show you on the H4 time frame, and even on the daily time frame, you can see that at this point we are at a very key low level on the Kiwi dollar. Okay, the last time we got below this point was back in 2020 during the pandemic. I'll put a line there, the last low point at about 5920. Coming back to the current, the most recent low point is at about 5, well, based on the candles there, what I've said 60, but you can say even 5975. Okay, so again, very similar to the Aussie dollar. If we do sell it down, it could go down, but as it goes into the area of the low, historic low since 2020, we're likely to see a lot of choppy price movements. We're going to see price spike down, spike up, move all around there. What I actually be looking for is if we see that come down and bounce towards the upside, right? Let's see whether it can bounce towards the upside. And you can see that level there, right? It's good. It formed a good support, bounced off, formed a good near-term resistance level. I'll be looking to buy if the Kiwi dollar can close above 60, let's say about 6020, right? So I would say that I'll be looking for a buying opportunity, even safer at 6030, 0.6030. And this is on H4 time frame. So you could be looking at about a 40 pip stop loss, about 120 pip take profit towards that high of 0.6158. You're looking at a 1:3 risk reward ratio towards the upside. This is a longer term trade. If you looked at it on the H1 time frame, so taking that away, On the H1 time frame, what you would be looking for is similar. I'll be looking for a buying opportunity above 0.6030. All right, stop loss below the support within the area, so about a 30, 35 pip, 40 pip stop loss. Take profit could still be up there, or you could even just have it at that near-term support turned resistance level again. You're still looking at a 60 pip, 70 pip move towards the upside. You're looking at almost 1:2 risk-reward ratio towards that 0.61 resistance, round number resistance level. Okay, so you can see now that if we do see bad news for the US, right now it's pushing a bit lower. If we do see a bad news for the US, we're going to see the Kiwi dollar, we're going to see the Aussie dollar push up towards upside. I'll be looking for it to break above a resistance level or the near-term resistance level before I will look to buy towards the next resistance level. This is on the weaker dollar trade. All right. Any questions so far? All good? Alrighty. Okay, good. So with that, what happens? Where do we, one more to look at if we do see a good or a bad, right? This is a good or a bad news from the US. Then you're going to see this. You're going to look at the yen, the US yen. All right. If we look at the US yen, what you're going to pay attention to at this point, currently US yen at that 143.42 level, you can see that it's been bouncing around that 143.50 level. Tried to break up, couldn't go up. Tried to go lower, couldn't do that either. But it's bouncing around that price level of 143.50. So about there. Okay, you can see that the last time it came down, tested and bounced, broke lower, tried to break up, failed, turned back down, broke strongly towards upside, towards that 140, almost 145 level, before turning back down again. Again, this price level comes into consideration, now looking like it's pushing up again. All right, so this will be the pair that the US yen will be the one that I'll be looking at in either a good news or a bad news scenario. All right, in a good news scenario, good US news scenario. Hey Taylor, I will jump onto gold. Maybe I'll jump onto gold after the US yen. So hang on tight there. All right. So what happens with the US yen in a good news scenario? Stronger US dollar, we're going to see the US yen push towards the upside. What I'll be looking for is for price to break above that 143.80 level, right? So you'll be looking at entry above 143.80, take profit towards that near-term high of 145, so about 100 and almost 110 pips towards the upside. Stop loss just below that support level, 40 pips. You're looking at a 1:2, almost 1:3 risk-reward ratio towards the upside on the US yen, if we see that stronger US dollar. Alternatively, retail sales numbers gets released. We see a weaker dollar, right? Because of a bad news, then we're likely to see the US yen drop. We're likely to see the US yen drop because of a weaker dollar. Where could it drop to? I would say that it could get to about that 141, or a little bit more conservatively at a 142 level. Okay, so what we'll be looking at is that it'll come back up now, test around this level, look for it to turn down and break lower. Then I'll be looking to sell down from about 143, below 143.20. Stop loss again, tight at about 45 pips just above that resistance level now. Take profit about 100 to 110. You're looking at a 1:2.5 risk-reward ratio towards the downside, towards that 142 support level. Okay, so quite interestingly, US yen currently at that 143.50 price range, price area. You could be looking at this for either the upside or the downside potential, depending on what numbers the news gets released at. All right. So any questions there? I saw your question on Brent. I will get to that after gold. All right. Okay. So as promised to Taylor, let's look at gold. XAU USD. Cleared it out. All right. So just a question there. Would you trade gold on the longer term or on the shorter term? Will you be looking at gold during the news? On the shorter term, all right. Okay. So if you're looking at this, I'll show it to you on both time frames. Trading on a 15-minute, fantastic. All right. So I'll show it to you on the different time frames, right? Firstly, on H4, and then after that, down to the H1 time frame. Okay. I tend not to do analysis or to do a webinar analysis on the 15-minute time frame because it gets a bit time sensitive. So, it changes very quickly as well. So we do it on the 4 and then onto the 1. So gold currently at that 1688 level, dropped quite strongly. I was actually thinking, could it get to 1680, right? Why 1680? Because of that point there, back in August 2021, where it dropped to that 1677, it was 1681. Okay, 1678 level or 77 level, and then it bounced quite strongly. We can also see that, let's say 1675, it dropped to that point. First time, it bounced off in March after hitting the 1675 level or 1676, bounced up. Again, end of March, bounced strongly towards upside. Again, in August, came very close to it in July this year, bounced up, and right now approaching that level again. So what I'm actually looking for here is that would we see gold come down, maybe test or break a little bit, false break, and then push towards the upside, right? So I'm looking, are we going to see this push towards the upside on gold because of that very strong support level? If I went to even a weekly time frame, you can see that as I drag that line right across, where was it, 1677 or 1675. We even went as far back as in May 2020, where it's hit that level and bounced strongly towards the upside. So this is at a very strong support level, right? So again, now back to the H4 time frame, I'll be looking for that. Can price, take this away. Can price come down? Test 1674, 1675, and then bounce back up? Or I would say that could it be in this area, right? Price could come down, bounce around within this area like that. Could do that. And then if it does break up, could we see that big upside move? All right, so this is on H4 time frame. How high can it go? Well, it could go very high, but I think that a reasonable level would be for it to bounce back up, break above 1690, right? If it breaks above 1690, then I would say go back to the recent high of 1735, about 1735, stop loss below that point, or even, no, I would say below that point, about there, below that recent point because it's bounced off. Then you're looking for, oops, that's wrong. Hang on. You do that instead, right? Above 1690, take profit there. Stop loss about there. You're looking at a 1:2 risk reward ratio towards the upside on gold, H4 time frame, as we look for it to. Looks like it's failing to break lower. It's a bit of indecision there. Most likely, what's going to push this towards the upside is if we see that dollar weakness come into play, right? It's not going to be always perfectly correlated, but it's going to possibly have some impact as we see the dollar weakness come into play. We could see gold push up from this support level. Hey, Ismet, for sure I will do that. Okay, so right now we've only gone through a couple. So Aussie dollar, Kiwi dollar to push higher, Aussie and Kiwi dollar to push higher if we see that dollar weakness from the news later. The yen, the US yen, both upside or downside potential, depending on what the data is going to be. So you will look at the data release, you look at the dollar index volatility, then that's going to give you a good hint of where the US yen is going to be, right? So there is the weakness, there is a weakness and or strength, and then I'll show you a couple more where you can be looking at for US dollar strength. Okay, gold in this case on H4 time frame, we'll be looking at if we see dollar weakness as well. Dollar weakness, gold strength. Inverse, slightly inverse, non-perfectly inverse relationship between gold and the dollar. Looking at gold on the H1 time frame, this is why when you look at it on the smaller time frame, it can look a bit over convincing, right? It looks like it's in a consolidation now, and then it looks like it could break strongly towards the downside, quite similar to what happened over the last couple of days, right? Consolidation and a break towards the downside. I think that in the short term, maybe, right, we could see this push a little bit lower, but I think overall, that's a very key support area right now. I'm looking for it to bounce off. I wouldn't be looking to sell gold on a short term. I think it's a little bit too risky at such a key support level. I'll rather wait it out, look for that bounce before looking to jump towards the upside. All right. So I hope I answered your question there, Taylor, and also Pedro. Fantastic. You're most welcome. Okay. And also on Ismet, hope I answered your part of that question. Aussie dollar, Kiwi dollar on weakness, yen possibly on the with strength or weakness. I'll look at Brent as well from Juha. All right, so Brent has been very interesting. Okay, so Brent, I definitely won't say H1 is just too volatile. Most likely you're always going to get caught out due to spikes and shadows and tails on Brent. So I would say, try to do it on the slightly bigger time frame. What's happening with Brent or energy prices in general? We're seeing that demand is slowing down, right? Demand is slowing down, which should cause prices to drop, but supply is also slowing down, right? Supply constraints are still persisting. We have Russia still threatening to cut oil supply, gas supply towards the Eurozone, right? We have, I think, Nord Stream is turned off already. So there is a serious supply crunch right now, right? So because of that, we actually saw that push towards the upside on Brent. At this point right now, it is trading at 94.19. I think that, from my view, I think that is going to trade between this range, right? Until something is confirmed, until they're going to say that they're definitely not or they're falling short in supply, right? Then we're going to see a big push towards upside, or they've solved a supply constraint. We're likely to see Brent trade between 91.80, 91.81, and 96.50. I think that we're going to see price do that, bounce in that range. What could happen is if price breaks towards the upside. If it breaks towards the upside, then you could see a very high level of 105 because big news has to happen, right? A big news has to happen to push Brent towards upside, supply constraints, pushing it up. Then you'll be looking only to buy. I would say look to buy only if it breaks above 98.20 or 98.50 to be extra safe, because you don't want it to fake break and come back into the range. If it breaks above that level, it could look very similar to what happened here in August. Broke above, shoots up towards that recent high point. All right. So Juha, I hope I answered your question there on Brent. Looks like it's going to be trading within the range, looking for it to break towards the upside above 98.50 to possibly, I don't think it'll get there in a hurry, but possibly get towards the 100 or 105 level. If it does break downwards, I think that there might be limited downside. 88, or round number at 88, there could be that key support level, very low level there. The last time we saw it was back in January this year as it scaled up from there. All right, so I think that if we do see price drop, break below 91.81, could come down towards 88, but more likely, I'm more tempted to think that it's going to push towards the upside. All right, super, you're most welcome. Noel with US CAD and US Swiss franc. Okay, so before I get to US CAD and the Swiss franc, I want to do a quick one on the euro and the pound dollar. Here we go. Where's my euro? I know it's here somewhere. Okay, there we go. Take all that away. All right, so euro dollar, right? Euro dollar right now still trading just below or trading along that parity level, right? Trading just along that parity level, just below that. But you can see that that downside has been quite limited towards that 98.97 level or 99 level at the lowest point of 98.65. Okay, in this case, I'll be looking at, could price push down, break below the breakout of that consolidation. Good US data, right? Good, strong US data could, surprisingly strong US data, could push the euro down towards the downside, following that trend. So it's dropped, it's consolidated. Can it break lower again? I'll be looking for it to break below 0.9955. Then look, oops, someone said fib and I draw a fib level. Not that one. I'll be looking for that. About a 70 pip take profit, about a tight 30 pip stop loss, a 1:2 risk-reward ratio towards the downside. But we need to see the dollar strength. We need to see price break below 9955 before I'll be looking to sell it down towards that very low point. I wouldn't bet on the euro dollar dropping below that for now. Okay, so bad news, Aussie, Kiwi, good news, euro, good news, bad news, US yen, and then pound. Pound dollar dropping again, right? Pound dollar dropping quite strongly right now. I'll be looking for this to come down towards that 1.14 level. Strong US dollar. Okay, back to the H1 time frame here. It's coming very close. I was actually very tempted to jump onto this trade at the last hour, just before this call, but I wanted to monitor my trade, so I didn't jump onto it. Has moved since already. Next level, I'll be looking for it to break below that recent low, that overnight low at about 1.1480 to sell down towards, right? So I wouldn't consider that for now, towards that low point there of 1.1418. Again, this would be dollar strength to push it down on the dollar good news scenario. Sell it down, stop loss about 25 pips, 30 pips stop loss, take profit about a 50. If I move this down to there, it would be about 50 to 60 pip. Take profit, almost a 1:2 risk-reward ratio towards the downside. Okay, so good news, bad news scenarios, we have it covered on 2 currency pairs each, and then the US CAD coming up with the US Swiss franc as well. All right, so for Osman, what kind of strategy do you guys work? I do a combination. I use a combination of fundamentals together with the technical levels being my support levels and trend. So I'm a lot of trend following. I tend not to do counter trend, but a lot of trend following trades. Okay, I like this one, US CAD, as it approaches that 1.32 level. This is going to be similar to the US yen trade or the US yen analysis. All right, what I'll be looking for, you can see last time it hit, where can I do that? Okay, last time it hit with double top. As it broke that neckline, we saw that big drop. Again, bounce. I see that. Can it come down? Can it form a double top? Or if I test again, can it form a double top and drop back down again? So I'll be looking for either a selling opportunity on the US CAD, on the loonie. All right, take all that away first. I'll be looking for it now, possibly test that 1.32 level, reject on the bad news scenario, weaker US dollar, pushing price down, then quite simply a rejection. What happened here on the 1st of September, again on the 7th, now looking for the 15th. If it comes up, test and reject that level, then I'll look to sell down about a 30 pip, 40 pip stop loss. You could go all the way down towards that 1.2975 level, a big 61:6 risk-reward ratio towards the downside. Could even have about a 40 pip stop loss or 1:5 risk-reward ratio towards the downside on the US CAD. This is on H4 time frame. Okay, so I'm looking for that rejection to push down. On the flip side, if we see that dollar strength come into play, then we're going to see the US CAD push up. Right, you're going to see a US CAD push up, which would mean that it's at a very high point. Okay, daily time frame. The point beyond 1.32 is about 1.3424. Okay, so again, back to H4. If price breaks above that 1.32 level, we could see the US CAD climb strongly towards the 1.34 level, but we're going to see that zigzaggy move in between. Okay, so you could be looking at a long position above 1.32, so about 1.3240. Take profit 168, 170, stop loss about 60 pips, almost a 1:3 risk-reward ratio towards the upside. Okay, hey Luis, how are you doing? How's Peru? All right, so I hope I answered your question there, Noel, on the US CAD. US Swiss franc next. Okay, US Swiss franc, I think Stephen just said, we use fib levels. Works very well. You can see how it's reacting to all those fib levels so far, but I'll clear all that out for now. And if I just did that one level towards the upside, you can see that the US Swiss franc has dropped. It is testing that 0.95, almost 0.9550 level, 61.8% fib level there. Okay, so you can see that the trend has been pushing towards the downside. We saw that retrace back up towards 50%, and then now it turned back down again. What I'll be looking for here in this case will be if price can break lower from 61.8. Right? If it can break below this point, then I'll be looking for dollar weakness to come into play. Right? In this case, about a 40 pip stop loss towards that 78.6 level, about a 60 pip or 65 pip take profit, a 1:1.75 risk reward ratio towards the downside on the US Swiss franc H4 time frame. Okay. Makes sense so far. You're most welcome there, Noel. Okay, and then lucky last, we'll look at the index, the dollar index. Okay, so this was the last time I drew this. My last analysis I did said it was going to come down, break below that level. It did that. I was going to say it's going to bounce back up. It did exactly that. But next analysis was that it's going to turn back down from this point, right? It's going to turn back down from this point because of a potentially weaker retail sales number. We're going to see that push lower. Okay, so still holds, the analysis still holds. We're going to see we saw it break from that trend line towards the downside. Right now at 109.70 or 109.72. If it does turn down, break below 109.45, and we can see that push towards the 108 support level. I don't think, or it's going to be very crucial for the US dollar index to stay above 107.75, just to make sure that, or in order to make sure that the uptrend is still valid, right? The uptrend is still valid. So I think it'll come back down towards 108.16 and then possibly consolidate and possibly bounce back up again. So looking at the dollar weakness to come in. If we don't see the dollar weakness, if it just comes down here and bounces towards the upside, I think the limit is at about, firstly, the 110.72 level. Could go higher, but I think that retail sales number tonight is possibly not going to be the big push strongly towards upside. We're going to see some strength coming in. US CAD BS taking control now. Let's go back to that. H1 time frame. Right, so yep, bears, well, pushing up is CAD bears getting in control. So pushing towards the upside. I'm looking to see what happens here. You can see that this was on when? The 14th of September, big strong push. I actually thought that based on that push, we're going to see it break above 1.32. Didn't happen, hit and turn back down again. So I'm looking to see what's going to happen here. Might come up close, but I could just consolidate around this level before turning back down again. On M5, let me see how to get to the 5 here. There, you got it. You got it. Thanks for that, Stephen. Bit of a pin there, turning back down again. It is a couple of minutes towards the end of the candle. So we could see a bit of a retrace back here. Right, I'll do one of the things I do like. I do have my Bollinger Bands in there. Okay, so why I like my Bollinger Bands is because I do realize or tend to see that once it's outside, price is outside of the Bollinger Band, we do see it trace back in again. So it could come back in slightly before turning back up again. I'll possibly leave it till the news event, not very far away now, before we can look for it to push in either that direction at that 1.32 level. Okay. Any further questions at this point? While we're here, are you guys planning to actively trade the news, or are you looking to, oh wow, look at that, push down, right? Or are you looking to sit it out and only trade after the news? I think this will be a very nice trade, especially if it rejects that 1.32 level. You know, even on H1 time frame, keeping it a little bit tighter, you could be looking at selling about 1.3140, stop loss bit tight, a bit long at 75, take profit about 100 and towards that recent low, 180 pips towards the downside, a 1:2 towards the downside. Pedro waiting trade after the news. That's good. That's good. Let the fireworks blow past before jumping in. I like the idea as well. All right. So what I tend to do is during the news or before the news release, I'll be looking at it on the M5, M15, M5, and M1 to look to see if I can do a quick scalping trade or not, a couple of quick scalping trades. But if not, then I would be, if I don't get into that trade, then I'll wait it out, let the hour close, and then get into the more medium term or intraday trades after the news. Alrighty. I hope you had a good session. Do you guys have, let me know, did you guys have a good session? Is it useful? If you've got any feedbacks, please let me know. I'll be happy to take on any feedbacks and comments. Fantastic. You're most welcome there, Stephen and Pedro. All right. So with that, I do try to keep it simple. You know, trading doesn't have to be tough and complicated. We'll try and keep it simple and straightforward. All right. So with that, is there a group where we can swap ideas on a daily basis? Pedro, I'm pretty sure there is. Maybe reach out to the organizers on IronFX, and I'm sure they'll point you towards the direction of the group. All right. So with that, trade well, trade safe. Take care now. Bye-bye.
Hello everyone, my name is Emily and today we're going to talk about money management. In this video you will learn what money management is and how to apply it. In its broader sense, money management is a tactic traders follow to preserve their funds. This way they limit the risk of their portfolio while potentially maximizing its returns. In any case, money management is the aspect of your trading that greatly influences your profits. So it is an important part of a successful trade. In fact, according to studies, almost 90% of the divergence in a trader's performance is because of money management. Although it's not complicated, it requires discipline. Interestingly, irrespective of having a solid trading plan in place, without money management, you could still lose money. However, with a good money management system, you could improve your plan's performance and potentially have great returns as well. The basic elements of money management are the following: a stop loss order for each trade, a certain amount of funds to risk in each trade, and the maximum amount to risk in a certain period. So the question is, what amount of risk should you take? According to experienced traders, you should never risk more than 1 to 3% of your equity in total in a trade. More aggressive risk could take your account as high as 20%, but there will be larger swings, and this could affect your judgment. It is true that every trader sees risk in a different way. However, the time you have to put in your investments, availability of capital for present or future movements, personality, and risk tolerance are some factors affecting how you see risk. What is important is to keep your risk small and constant, and remember that one trade should not matter. Thank you for watching.